Test 4, Agency, Listing Agreements 4.1 The agency relationship is defined by a. The Realtor Code of Ethics. B. The laws of agency, or in some states, by statute. C. The law of real estate contracts. D. The agreement between a principal and an agent. 4.2 Which of the following is true of the connection between compensation and the agency relationship? A. An agreement to give and receive compensation creates an agency relationship. B. If an agency relationship exists, the principal must provide valuable consideration to the agent. C. The relationship is independent of any compensation arrangement. D. If an agency relationship exists, the agent is entitled to compensation. 4.3 One of the parties to an agency relationship defaults, and the agreement terminates. Which of the following is true? A. All obligations are extinguished. B. Both parties must continue to perform all other obligations of the agreement. C. The defaulting party may have a financial consequence. D. The damaged party has no claim against the defaulting party. 4.4 Among the fiduciary duties imposed on a real estate agent is the requirement to a. Refuse offers the agent knows will be unacceptable to the principal. B. Present all offers to the principal regardless of their amount. C. Advise the principal against accepting an offer that is below full price. D. Advise a prospect that the principal will not accept the prospect's offer in order to elicit a better offer. 4.5 One of the agent's fiduciary duties that continues even after a listing agreement expires is a. Obedience. B. Diligence. C. Confidentiality. D. Disclosure. 4.6 The standard of care and competence that a principal can expect from an agent is generally that which is a. Specified in the agency agreement. B. Necessary to earn the promised compensation. C. Necessary to procure a customer. D. Comparable to that of other practitioners in the area. 4.7 Agent Michael is showing his new listing to a buyer who informs him that he has just inherited $5 million. Michael is now bound by fiduciary duty to a. Keep the information in confidence. B. Disclose the information to the buyer's agent. C. Disclose the information to the seller. D. Verify the buyer's statements before disclosing them to the client. 4.8 Agent Gary has executed an exclusive buyer-broker agreement with the Andersons. The agent subsequently places an offer with Melinda, the exclusive selling agent for the Lincolns, to buy their lakefront property. The offer contains provisions for the Lincolns to pay the brokerage commission, which the Lincolns agree to. Given this set of circumstances, Gary owes the full set of fiduciary duties to a. The Andersons. B. The Lincolns. C. Jerry's broker. D. Melinda's broker. 4.9 A subagent is the agent of a. The seller. B. The buyer. C. A broker who has an agency relationship with the client. D. The clients and the customer's agents. 4.10 Which of the following is a dual agency situation? A. Two agents share the exclusive right to represent the same client on all transactions. B. One agent represents both sides in a transaction. C. A selling agent from one brokerage works with a listing agent from another brokerage to complete a transaction. D. One agent represents two sellers at the same time. 4.11 The duties of a transaction broker or facilitator include a. Preserving the confidentiality of information received from either party. B. Helping the two parties achieve their respective objectives. C. Disclosing material facts that affect the value of the property to both parties. D. Choosing to obey the instructions of one party and informing the other party of the decision. 4.12 In which of the following contact situations would a seller's agent be expected to disclose his agency relationships? A. The agent is showing the client's property to a prospective buyer. B. The agent tells an acquaintance at a party about the client's property. C. The agent answers questions about the client's property for a telephone caller responding to a newspaper ad. D. The agent is showing a potential buyer houses in a certain price range in the multiple listing book. 4.13 The essential foundation of the agency relationship consists of a. mutual respect, compensation, and confidentiality. B. Diligence, results, and compensation. C. Service, marketing, and respect. D. Good faith, trust, and confidence. 4.14 Audrey wants to take a vacation. To do so, she authorizes an agent to conduct the operations of one of her business enterprises. The kind of agency she has established is A. Limited. B. General. C. Universal. D. Special. 4.15 A property seller empowers an agent to market and sell a property on his behalf. The kind of agency represented is A. General. B. Special. C. Universal. D. No agency. 4.16 Implied agency arises when A. An agent accepts an oral listing. B. A principal accepts an oral listing. C. A party creates an agency relationship outside of an express agreement. D. A principal agrees to all terms of a written listing agreement, whether express or implied. 4.17 An agency relationship may be involuntarily terminated for which of the following reasons? A. Condemnation of the property. B. Mutual consent. C. Full performance. D. Renewal of the agent's license. 4.18 A principal discloses that she would sell a property for $500,000. During the listing period, the house is listed and marketed for $530,000. No offers come in, and the listing expires. 3 weeks later, the agent confides to a customer that the seller would have sold for less than the listed price. Which of the following is true? A. The agent has violated the duty of confidentiality. B. The agent has fulfilled all fiduciary duties, since the listing has expired. C. The agent is violating the duties owed this customer. D. The agent has created a dual agency situation with the customer. 4.19 A principal instructs an agent to market a property only to families on the west side of the university campus. The agent refuses to comply. In this case, A. The agent has violated fiduciary duty. B. The agent has not violated fiduciary duty. C. The agent is liable for breaching the listing terms. D. The agent should obey the instruction to salvage the listing. 4.20 An owner's agent is showing a buyer a residential property for sale. The buyer notices water stains on the foundation walls and floor, and informs the agent. The appropriate course of action for the agent is to A. Immediately contract to paint the ceiling. B. Immediately contract to repair the roof. C. Suggest the buyer make a lower price offer. D. Inform the seller. 4.21 The meaning and salient characteristics of the agency relationship should be disclosed to the client A. Prior to completing a listing agreement. B. Prior to or upon completion of an offer. C. Upon the initial contact with the person. D. Prior to showing properties. 4.22 When must a listing agent disclose his or her agency relationship to prospective tenants or buyers? A. Immediately prior to the initial contact. B. Upon initial contact. C. Whenever substantive communication is made beyond casual conversation. D. Immediately following any offer executed by the customer. 4.23 A buyer agent or tenant representative should disclose his or her agency relationship to the owner's agent A. Immediately prior to the initial contact. B. Upon initial contact. C. Immediately prior to substantive contact. D. Immediately following any offer executed by the landlord. 4.24 An agent is operating as a disclosed dual agent on a transaction. In this case, the agent A. may not represent one party's interests to the detriment of the other. B. must operate without a listing agreement. C. must be obedient and loyal to both parties. D. must require that the principals refrain from disclosing any material facts to him. 4.25 An agent informs a buyer that a provision in a contract is very commonplace. After explaining the clause, the agent assures the buyer that the clause does not mean anything significant. If something goes wrong with the transaction, the agent could be liable for A. violating duties owed a customer. B. Misinterpreting the clause. C. Intentional misrepresentation. D. Practicing law without a license. 4.26 When a broker enters into a listing agreement, the broker has agreed to accept which of the following? A. Fiduciary and contractual obligations with the client. B. Fiduciary relationships with client and customer. C. Contractual obligations with cooperating brokers. D. Fiduciary obligations with the customer. 4.27 The degree of authority granted by a residential brokerage listing agreement generally allows the agent to a. Create contractual obligations for the client. B. Negotiate the selling price between client and customer. C. Hire inspectors and other individuals to prepare the property for marketing. D. Market, sell and show the property. 4.28 A salesperson, without an oral or written listing agreement, brings potential buyers to the seller. The seller says, "You can bring me buyers if you want, but I'm not paying you a commission." The salesperson then continues to direct buyers to the property. Which of the following is true about this situation? A. There is no agency relationship, and therefore the seller will owe no commission if one of the salesperson's buyers buys the property. B. An implied agency may have been created, with obligations to perform for both seller and agent. C. The seller and agent have an illegal, undisclosed agency relationship. D. The agent has an open exclusive agency listing with no commission agreement, and therefore owes no fiduciary duties to the seller. 4.29 An agent enters into a listing agreement with a home seller, but then becomes too busy to professionally fulfill the terms of the agreement. To solve the dilemma, the agent assigns the agreement to another licensee in the office. Which of the following is true about this situation? A. The agent cannot assign the listing agreement. B. The new listing agent acquires the full set of fiduciary duties owed to the client. C. The new broker has to split any commission that results with the assigning broker. D. The original broker has to disclose the assignment to the seller. 4.30 From an agent's point of view, the most desirable form of listing agreement is A. Exclusive agency. B. Exclusive right to sell. C. Open listing. D. Net listing. 4.31 What is a multiple listing? A. A listing shared by a listing agent and a selling agent. B. A listing that a listing agent delegates to a subagent. C. A listing that is entered in a multiple listing service to enable cooperation with member brokers. D. A listing that authorizes a listing agent to market more than one property for a seller. 4.32 Which of the following conditions is necessary for a customer to qualify as ready, willing, and able in the context of a commissionable transaction? A. The customer's offer must be accepted. B. The customer must be legally competent to undertake the transaction. C. The customer must have a commitment from a lender. D. The customer must have no business relationship with the agent. 4.33 Although a listing broker may delegate listing tasks to an employed licensee, the broker may not delegate the authority to A. Obtain and distribute compensation. B. Provide cooperating brokers with information about the property. C. Advertise the property. D. Inspect the property for hazardous substances. 4.34 Agent Peter has an open listing with Frank. Paul is Peter's broker. Agent Perry's customer buys Frank's house. Patrick has a commission agreement with Frank. Who is most likely to be compensated in this scenario? A. Peter, since he has a written listing agreement. B. Paul, since he is Peter's broker. C. Perry, since he found the customer. D. Patrick, since he has a commission agreement. 4.35 If an agent has an exclusive listing to sell a property, and the property is then taken by eminent domain, what is the status of the listing? A. The seller's obligations under the listing are assigned to the agency that takes the property. B. It becomes a voidable contract. C. The commission clause of the agreement is cancelled. D. It may be terminated against the agent's will. 4.36 A broker obtains an exclusive listing to sell a house, but after 2 months, he abandons the listing because the seller is too demanding and hot-tempered. What can the seller do in this situation? A. Have the licensee's license revoked for negligence. B. Sue the broker for money damages. C. Sign a listing agreement with another broker and force the first broker to pay the commission. D. Force the broker to perform the contract without compensation. 4.37 An owner agrees to pay a broker for procuring a tenant unless it is the owner who finds the tenant. This is an example of A. Exclusive right to sell agreement. B. Exclusive agency agreement. C. Open listing. D. Net listing. 4.38 A landlord promises to compensate a broker for procuring a tenant, provided the broker is the procuring cause. This is an example of A. Exclusive right to rent agreement. B. Exclusive agency agreement. C. Open rental listing. D. Net lease listing. 4.39 A property owner agrees to pay a broker an open-ended commission as the difference between the sale price and a net amount, provided the owner receives a minimum amount of proceeds from the sale at closing. This is an example of A. Exclusive right to sell agreement. B. Exclusive agency agreement. C. Open listing. D. Net listing. 4.40 In the context of agency law, the legal difference between an owner representation agreement and a buyer representation agreement is A. The client. B. The commission amount. C. Fiduciary duties. D. Regulatory approvals. 4.41 A multiple listing authorization gives a broker what authority? A. To list the owner's property in a multiple listing service. B. To sell several properties for the owner at once. C. To represent both seller and buyer, if necessary, in selling the property. D. To delegate the listing responsibilities to other agents. Test 5, Brokerage Business, Sale Contracts 5.1 Which of the following business entities is generally prohibited from brokering real estate? A. Sole proprietorship. B. Partnership. C. Corporation for profit. D. Nonprofit corporation. 5.2 A joint venture may generally broker real estate if the co-venturers A. Form a business trust. B. Form a cooperative association. C. Are properly licensed. D. Are limited partners. 5.3 A licensed salesperson may work only for a client who has signed a listing agreement with a licensed broker. B. A single employing broker who has an active broker's license. C. A client who has signed an authorization agreement with a licensed salesperson. D. An employer who has an active or inactive broker's license. 5.4 Which of the following activities is a licensed salesperson allowed to engage in? A. Accept a listing that is in an associate's name. B. Accept a commission directly from the MLS. C. Offer a property for lease on behalf of the employing broker. D. Sign a contract with a management company on behalf of a client. 5.5 If a salesperson has worked on a completed transaction that involved a listing agent, a selling agent, and several subagents for each of these, from whom will the salesperson receive any compensation that is due? A. The listing agent. B. The selling agent. C. The seller. D. The employing broker. 5.6 A property has sold for $380,000. The listing agreement calls for a commission of 6.5%. The listing broker and selling broker agree to share the commission equally. What will the listing agent receive if the agent is scheduled to get a 40% share? A. $4,445. B. $3,556. C. $2,667. D. $4,940. 5.7 A real estate salesperson finds a buyer to a for sale by owner property. The home sells for $245,000, and the seller agrees to pay a commission of 3%. The salesperson is on a 65% commission schedule with her broker, who pays her 65% minus office expenses of $500. How much will the salesperson receive from this transaction? A. $4,778. B. $4,452. C. $4,278. D. $3,175. 5.8 A salesperson makes a listing presentation to a home seller and obtains a signed listing agreement. The first thing the salesperson must now do is A. Make a final pricing determination for the property. B. Negotiate the commission with the client. C. Complete the signing of the listing. D. Explain the agency relationship to the client. 5.91 shows a customer a property that is listed by another brokerage firm. He obtains an offer that is $5,000 less than the listing price. How should one deal with this offer? A. Advise the buyer that the offer will be rejected. B. Present the offer to the seller at the earliest possible moment. C. Ask the listing broker to lower the listing price. D. Counter the offer. 5.10 A broker receives an earnest money deposit from a buyer and signs the check over to the listing agent as a partial commission advance. What is wrong with this procedure? A. Nothing, provided the deposit clears the bank and doesn't bounce. B. The broker and the agent are guilty of price fixing. C. The broker has illegally converted security funds for business use. D. The agent may not be able to return the advance if the transaction falls through. 5.11 Under what circumstance may a property listed for sale with a brokerage be advertised without identifying the broker? A. When the salesperson is an out-of-state licensee. B. When the ad is restricted to the brokerage's website. C. When the advertisement is a silent ad. D. Never. 5.12 Competing brokers in a county seat agree on a standard commission rate for principals within the county. This is a possible violation of A. Fair trade and antitrust laws. B. The statute of frauds. C. Contract law. D. The Uniform Commercial Code. 5.13 What is co-brokerage? A. An owner agent and a buyer agent combine efforts to complete a sale. B. Outside brokers assist a listing agent in procuring a buyer. C. An owner or buyer lists with several brokers to complete a transaction. D. Agents from a single agency cooperate to generate listings for the broker. 5.14 Which of the following may associate his or her name or title with the term realtor registered? A. Any active or inactive broker in the country. B. Any duly licensed, active agent or broker. C. Any member in good standing in a properly chartered real estate trade organization. D. Only members of the National Association of Realtors registered. 5.15 Real estate sales agents are legally authorized to A. Represent their employing broker in procuring clients and customers. B. Act directly on a client's behalf to discharge the broker's listing responsibilities. C. Negotiate and execute contracts for sale on behalf of the client. D. Take on the listing responsibilities for other listings in MLS. 5.16 How does the position of an independent contractor licensee, IC, differ from that of an employee licensee? A. The IC is responsible for his or her own taxes, the broker does not withhold. B. The IC must obtain his or her own training, it is not provided by the broker. C. The employee is not entitled to company benefits. D. The IC must abide by all office meeting schedules. 5.17 A salesperson's commission rate and structure is established by A. State regulation. B. Competitive conditions. C. Agreement with other brokers in the market. D. Negotiations with the client. 5.18 In obtaining offers from a buyer, an agent must be careful to A. Pursue only those offers which are at or near the listing price. B. Balance the owner's price expectations with the buyer's opinion of value. C. Avoid disclosing what price the owner will accept. D. Avoid completing offers that are beneath market value. 5.19 Commingling is the practice of A. Blending escrow funds on a number of properties in one escrow account. B. Mixing socially with prospects at open houses or other marketing functions. C. Allocating commission funds from a transaction for use in the agency's business. D. Mixing escrow funds with the broker's operating funds. 5.203 Leading agencies charge identical commission rates for brokering office properties in Phoenix. Based on this information alone, which of the following is true? A. There is insufficient evidence of anything other than a normal business practice. B. The brokers have engaged in legal collusion. C. The brokers have allocated the Phoenix market. D. The brokers have illegally fixed prices. 5.21 A real estate sale contract is an executory contract until a. The completed sale transaction is recorded. B. The buyer and seller have agreed to all provisions and have signed the contract. C. All the obligations and promises are performed and the transaction is closed. D. The loan has been approved, the title insurance has been obtained, and the closing date is set. 5.22 In assisting a buyer or seller to complete an offer to purchase, what should an agent do to reduce the risk of committing an unauthorized practice of law? A. Use a standard contract promulgated by a state agency or a real estate board. B. Observe ethical standards promulgated by real estate trade organizations. C. Offer legal advice only on points of the contract that the agent is absolutely certain about. D. Write contract terms that are fair to both buyer and seller. 5.23 To be enforceable, a contract for the conveyance of real estate must a. Be acknowledged by witnesses. B. Be written. C. Be recorded. D. Have an expiration date. 5.24 A buyer makes an offer to purchase a house, and the seller accepts the offer. However, before the salesperson can inform the buyer of the seller's decision, the buyer delivers a written notice that she is opting out and canceling the agreement. At this point, which of the following is true? A. The contract has been legitimately cancelled and is null and void. B. The seller must give the buyer an opportunity to make a new offer. C. The buyer must perform under the terms of the contract. D. The seller must notify the buyer in writing that the buyer is in default. 5.25 Which of the following is an essential element of a valid contract for the sale of real estate? A. A valid blank form that the contract is written on. B. A habitable property. C. An offer and acceptance. D. A marketable title. 5.26 What kind of interest does the buyer acquire once a real estate sale contract is signed by the principal parties? A. Legal title. B. Lienholder interest. C. Reversionary interest. D. Equitable title. 5.27 A contingency in a sale contract is a. A promise by buyer or seller to perform a specific action. B. A condition that, if unmet, renders the contract unenforceable. C. One of several alternative actions that buyer or seller may take to satisfy contract requirements. D. An optional, unilateral action that either party may take at the request of the other party. 5.28 A clause in a sale contract stipulates that the seller must provide evidence that the property is free of active termite infestation. On the day of closing, the buyer learns that inspection service did not provide the required written documentation. The buyer then proceeds to declare that the sale is off. Which of the following is true of this situation? A. The seller can sue for specific performance. B. The buyer will be in default, and liable for damages, if he does not complete the transaction. C. The buyer may be able to have the contract cancelled. D. The contract is automatically void. 5.29 A buyer signs an earnest money agreement and gives it to the broker who showed her the property she is buying. After leaving the broker's office, she reconsiders and decides she prefers a different property. How long does she have to take back her offer? A. Until the seller communicates acceptance of the offer. B. Until the earnest money deposit check is cashed. C. She can take it back at any time, but must forfeit the earnest money. D. She cannot take it back until after the expiration date of the offer. 5.30 On Wednesday, Fred offers to sell his property to Jack for $275,000, with the offer to remain open until 5 p.m. the next day. On Thursday morning, Sally offers Fred $280,000 for the property and Fred accepts. At 1 p.m. on Thursday afternoon, Jack accepts. Which of the following is true of this situation? A. The acceptance by Sally creates a contract and terminates Fred's offer to Jack. B. Fred has entered into contracts with both Jack and Sally to sell the same property. C. Fred's acceptance of Sally's offer is invalidated by Jack's acceptance, because Fred's offer to Jack was made prior to Sally's offer to Fred. D. No contract has been created because it is impossible to have two valid sale contracts for the same property. 5.31 Among the items that normally must be disclosed in a sale contract or its addenda are the A. Buyer's financial capability. B. Buyer's source of funds for the down payment. C. Seller's acceptable price range. D. Agency relationships and property condition. 5.32 To create an enforceable option to buy contract, there must be an exchange of a promise to sell and a promise to buy. B. Valuable consideration and a right to buy. C. Valuable consideration and a promise to buy. D. A down payment and a post-dated contract for sale. 5.33 Mary Carboy buys a house from Jim Schmidt and at the same time obtains an option to purchase the adjoining vacant lot for $10,000 within 1 year. A few months later, Carboy informs Schmidt that she is ready to exercise her option, but finds that Schmidt has received an offer of $12,000 from another party. Schmidt states that he will accept the offer unless Carboy is willing to match the $12,000 offer. Which of the following is true of this situation? A. Schmidt must sell to Carboy for $10,000. B. Carboy must pay $12,000 or lose the property. C. Schmidt may sell to Carboy or the other party, but the price cannot exceed $10,000. D. If the other party delivers payment before Carboy does, the option is cancelled. 5.34 Which of the following is true regarding the assignability of an option? A. It is assignable only if the contract specifically allows assignment. B. It is never assignable. C. It is assignable only if the option is exercised. D. It is always assignable unless the contract prohibits assignment. 5.35 Which of the following is true of a contract for deed transaction? A. At the end of the contract period, the vendee receives equitable title, provided all required periodic payments have been made. B. The vendee has no right to possess or occupy the property during the contract period. C. At the end of the contract period, the vendor conveys legal title, provided the vendee has fulfilled all obligations. D. The vendor may cancel the contract at any time before the final payment has been received. 5.36 Several buyers are competing for the last available home in a desirable new subdivision. One buyer calls the owner-developer directly on the phone and offers $20,000 over and above the listed price. The developer accepts the offer. At this point, A. The parties have a valid, enforceable sale contract on the home. B. The parties have completed a verbal, executory contract. C. The parties may not cancel their contract. D. The developer could not entertain other offers on the property. 5.37 An owner completes a sales contract on her property with a buyer. Before closing, the seller runs into financial trouble and assigns the contract to her principal creditor. The buyer cries foul, fearing the property will be lost. Which of the following is true? A. The buyer can sue the assignee to disallow the illegal assignment. B. The buyer can take legal action against the assignor. C. The assignor has completed a legal action. D. The sale contract is nullified. 5.38 A due on sale clause in a sale contract puts parties on notice that A. The full price of the property is due the seller at closing. B. Any loans surviving closing become immediately payable. C. All of the seller's debts must be retired before or upon closing. D. Any conveyance may trigger an acceleration of any loans secured by the property. 5.39 A tenant has an option to purchase agreement with the landlord that expires on June 30th. On July 1st, the tenant frantically calls the landlord to exercise the option, offering the apology that she was busy with a death in the family. Which of the following is true? A. Since options contain grace periods, the landlord must sell. B. The tenant loses the right to buy, but can claim the money paid for the option from the landlord. C. The landlord does not have to sell, but must renew the option. D. The option is expired, and the tenant has no rightful claim to money paid for the option. 5.402 Parties enter into a contract for deed agreement. In this form of agreement, a title is conveyed to the buyer, but the seller retains possession for a stipulated time period. B. The buyer contracts to pay all cash at closing in exchange for the deed. C. The seller retains legal title while the buyer makes partial payments until the contract is fully executed. D. The buyer immediately acquires legal title and takes possession. Test 6, Economics, Appraisal 6.1 If the price of an item is increasing, one can usually assume that a demand for the item is decreasing in relation to supply of the item. B. Demand for the item is increasing in relation to supply of the item. C. Supply of the item is increasing. D. Demand for the item and supply of the item are increasing. 6.2 When the market for an item has achieved market equilibrium, which of the following statements is true? A. New suppliers will enter the market and drive the price down. B. Demand will slowly taper off, driving the price down. C. Unmet demand for the item is directed toward demand for some other item. D. Supply and demand are equal, and price and value are equal. 6.3 As an economic product, real estate is distinguished by a. Its homogeneity. B. Its variety. C. The uniqueness of every parcel. D. Its ability to appreciate in value. 6.4 The city of Stevensville has declared a moratorium on new construction. If demand is increasing, what will be the likely effect on real estate prices in the area? A. Prices level off. B. Prices continue to follow the trend that preceded the moratorium. C. Prices fall. D. Prices rise. 6.5 If Okapi Incorporated, a company that markets its sports clothing worldwide, moves into Stevensville and hires 100 employees, it is reasonable to expect that the town will experience an immediate rise in the demand for industrial real estate, but no other changes in the real estate market. B. An increase in demand for all types of real estate. C. A housing boom, but no other changes in the real estate market. D. An immediate increase in the prices for industrial and office real estate, but no impact on the residential market. 6.6 What is absorption? A. The amount of new space that is added to available space over a period of time. B. The number of houses that are built over a period of time. C. The amount of space that is occupied at any given time. D. The number of available units that become occupied over a period of time. 6.7 When vacancies are declining in a real estate market, it is common for the market to experience a. Rising prices. B. Falling prices. C. Falling construction activity. D. Falling absorption. 6.8 The price for any product is a function of four fundamental determinants of value. These are a. Durability, feasibility, mobility, and location. B. Desire, utility, scarcity, and purchasing power. C. Popularity, recognizability, promotion, and rebate. D. Fungibility, costs, convenience, and uniqueness. 6.9 A town is rapidly growing, but all the buildable vacant lots in the most desirable area have already been occupied. In this case, it is likely that the price of existing homes in that area will stabilize, since the population must stabilize. B. Will increase. C. Will decline, since no further building can take place. D. Will not show any predictable movement. 6.10 If there is a significant undersupply of homes in a market, construction will tend to increase. This is an example of a. Supply outstripping demand. B. Demand outstripping value. C. Consumer optimism. D. The market tending toward equilibrium. 6.11 If commercial real estate rental prices are falling in a market, it is likely that a. Demand has outstripped supply of space. B. The market is in equilibrium. C. The market is oversupplied. D. Employment is increasing. 6.12 A construction boom in a market is an indication that prices A have been increasing, B have been declining, C have been in equilibrium, D have exceeded supply. 6.13 Why is real estate traditionally considered a relatively illiquid economic product? A. Its physical form is fixed. B. Real estate is defined as land, not water. C. It is often difficult to convert to cash. D. It cannot be moved. 6.14 What does base employment refer to in the context of real estate demand? A. The lowest category of employment in terms of wages and desirability. B. The number of persons employed in base industries in an area. C. The number of persons employed on military bases in an area. D. The labor pool available for employment in all industries in an area. 6.15 What is vacancy in real estate market economics? A property that has no owner-occupant. B. The total number of properties of a certain type that are on the market at a given time. C. The absence of certain types of users in a given market area. D. The total existing space of a certain type that is unoccupied at a given time. 6.16 A moratorium on new construction is an example of a local government influencing the real estate market, regardless of demand. B. The natural result of demand exceeding supply in a local market. C. Government promotion of the free market concept in the local real estate market. D. A government policy that aims to restrain a trend of rising prices in the local real estate market. 6.17 Of the following potential influences on a local real estate market, which one would be considered local, rather than regional, national, or global? A. Changes in money supply. B. Federal Reserve interest rates. C. In and out migrations of major employers. D. Trade imbalances with foreign trading partners. 6.18 There is a lot of new construction going on in the town of Florence. Which of the following would most likely be the immediate effect on the real estate market? A. Demand increases and prices rise. B. Vacancy rises and prices fall. C. Absorption and vacancy decrease. D. Supply decreases relative to demand. 6.19 What kind of real estate users are most concerned with neighborhood quality, access to services, property amenities, and quality of life in their demand for real estate? A. Retail. B. Office. C. Industrial. D. Residential. 6.20 One distinguishing feature of real estate as an economic product is A. Its easy convertibility to cash. B. Its quick response to changes in supply-demand balance. C. Its susceptibility to swings in the local economy. D. The easy substitutability of one item for another. 6.21 Bill Parsons paid $150,000 for a house to operate as a rental property, figuring that he could rent it out at a rate of $900 a month. In paying a price based on the property's ability to generate a desired future income, Parsons was motivated by the economic principle known as A. Substitution. B. Anticipation. C. Supply and demand. D. Utility. 6.22 Which of the following situations illustrates the principle of contribution? A. A homebuyer makes a down payment of 20% instead of the 10% the lender requires. B. A homeowner adds a third bathroom to a house and thereby increases the appraised value by $10,000. C. The appraised value of a house goes up by $20,000 over a 2-year period because of the prices recently paid for other houses in the neighborhood. D. Because of a decline in mortgage interest rates, a homeowner in a certain market is able to list her house at a higher price. 6.23 When a property owner combines two adjacent properties to create a single property with a higher value than the sum of the values of the two separate properties, the applicable principle of value is called A. Assemblage. B. Accretion. C. Progression. D. Subdivision. 6.24 What is the difference between market value and market price, if any? A. There is no difference. B. Market value is a broker's estimate, market price is a precise number derived by a licensed appraiser. C. Market value is an average price derived from comparable sales, market price is a price based on the cost of creating the property. D. Market value is an estimate, market price is the price at which a property sold. 6.25 The first step in the appraisal process, regardless of the appraisal method, is to a. Identify the highest and best use of the property to be appraised. B. Collect and analyze property data. C. Estimate the value of the land as if it were vacant. D. Define the appraisal problem and the purpose of the appraisal. 6.26 In the final step of an appraisal, the appraiser reconciles the value estimates derived by the various appraisal approaches by a. Disregarding the high and low extreme results. B. Averaging the results of all three approaches. C. Weighing the applicability of the approaches and considering the quality of data supporting each approach. D. Choosing the result that is closest to the average for properties in the immediate neighborhood. 6.27 Which of the following statements properly describes the central concept of the sales comparison approach? A. Find the median price of recently sold comparable properties and add or subtract dollar amounts in the subject property to account for competitive differences. B. Make dollar adjustments to the sale prices of comparable properties to account for competitive differences with the subject. C. Find at least 3 comparable properties that are currently for sale and make dollar adjustments to the listing prices to account for competitive differences with the subject. D. Apply an appreciation factor to the price at which the subject property most recently sold and make dollar adjustments to account for competitive differences with comparable properties currently for sale. 6.28 One of the strengths of the sales comparison approach is that it a. Takes into account the subject property's investment value. B. Reveals the profit margin of the builder or developer of the subject property. C. Discovers the underlying value of the subject property apart from the influence of competing properties. D. Takes into account the competitive value of specific amenities of the subject property. 6.29 In making dollar adjustments in the sales comparison approach, the appraiser a. Adds value to a comparable that is inferior to the subject property. B. Adds value to the subject property if it is inferior to a comparable. C. Subtracts value from a comparable that is inferior to the subject property. D. Subtracts value from the subject property if it is inferior to a comparable. 6.30 The best comparable property for use in the sales comparison approach is the one that a. Requires the most and largest adjustments. B. Requires the fewest and smallest adjustments. C. Sold most recently at the highest price. D. Is located closest to the subject property. 6.31 A house is being appraised using the sales comparison approach. The house has 3 bedrooms, 2 bathrooms, and a patio. The appraiser selects a comparable house that has 3 bedrooms, 3 bathrooms, and no patio. The comparable house just sold for $200,000. A bath is valued at $7,000, and a patio at $2,000. Assuming all else is equal, what is the adjusted value of the comparable? A. $202,000. B. $207,000. C. $195,000. D. $205,000. 6.32 Which of the following statements properly describes the central methodology of the cost approach to appraisal? A. Apply a depreciation factor to the reported actual cost of acquiring and improving the subject property. B. Estimate the cost of building the improvements on the subject property. C. Estimate the land value and add to this the actual cost of the improvements adjusted for competitive differences with similar properties. D. Add the estimated land value and cost of improvements and subtract the accrued depreciation of the improvements. 6.33 One of the strengths of the cost approach is that it a. Takes into account the amount of money required to develop a similar property. B. Is very accurate for a property with new improvements that represent the highest and best use. C. Results in an actual price in dollars instead of an estimated value. D. Reveals the owner's return on money invested in the cost of development. 6.34 The principle underlying depreciation from physical deterioration is that a. Eventually, a property loses all of its value. B. A property loses a portion of its value each year because of economic obsolescence. C. A property loses the same increment of value each year over the economic life of the property. D. The value lost to depreciation is incurable. 6.35 A property is being appraised by the cost approach. The appraiser estimates that the land is worth $30,000 and the replacement cost of the improvements is $95,000. Total depreciation from all causes is $10,000. What is the indicated value of the property? A. $135,000. B. $130,000. C. $125,000. D. $115,000. 6.36 Which of the following statements properly describes how to apply the income capitalization approach to appraisal? A. Apply a rate of return to the price paid for an income property. B. Divide the income a property generates by a rate of return. C. Estimate the amount of income a property must generate to return the capital amount invested in it. D. Estimate the rate of return a property owner receives from income generated by the property. 6.37 A strength of the income capitalization approach is that it A. Uses a rate of return that is required for all potential purchasers in a market. B. Yields an accurate projection of investment income. C. Uses a method that is also used by investors to determine how much they should pay for an investment property. D. Can be used with any type of property in any market. 6.38 A property is being appraised using the income capitalization approach. Annually, it has an estimated gross income of $60,000, vacancy and credit losses of $3,000, and operating expenses of $20,000. Using a capitalization rate of 10%, what is the indicated value, to the nearest $1,000? A. $370,000. B. $400,000. C. $570,000. D. $600,000. 6.39 An apartment building that sold for $450,000 had monthly gross rent receipts of $3,000. What is its monthly gross rent multiplier? A. 12.5. B. 0.01. C. 0.08. D. 150. 6.40 A rental house has monthly gross income of $1,200. A suitable gross income multiplier derived from market data is 14.1. What estimated sale price, to the nearest $1,000, is indicated? A. $169,000. B. $102,000. C. $203,000. D. $173,000. 6.41 A certified appraiser is one who has received certification by a licensed real estate school. B. The Appraisal Institute. C. The state in which the appraiser operates. D. The Appraisal Review Board. 6.42 The act that required federally related appraisals to be conducted by a certified appraiser is known as the Financial Institutions Reform, Recovery, and Enforcement Act, FIRREA. B. The Uniform Standards of Professional Appraisal Practice Act, USPAPA. C. The Appraisal Foundation Authorization and Reform Act, AFAR. D. The Federal Institution for Regulation and Enforcement of Appraisal Act, FIREAA. 6.43 As a component of real estate value, the principle of substitution states that if two similar properties are for sale, a buyer will purchase the cheaper of the two. B. If one of two adjacent homes is more valuable, the price of the other home will tend to rise. C. If too many properties are built in a market, the prices will tend to go down. D. People will readily move to another home if it is of equal value. 6.44 Highest and best use of a property is that use which is physically and financially feasible, legal, and the most productive. B. Is legal, feasible, and deemed the most appropriate by zoning authorities. C. Entails the largest building that zoning ordinances will allow developers to erect. D. Conforms to other properties in the area. 6.45 Lynn just bought a house. She paid $187,500 for it, even though it had been listed at $195,000. An adjoining property owner, Ken, had tried to buy the property for $185,000, but had been refused. He now offers Lynn $190,000 for the house. Lynn is interested, so she hires an appraiser. The appraiser returns an estimate of value of $200,000. Which of these numbers can be called the market value? A. $187,500. B. $190,000. C. $195,000. D. $200,000. 6.46 A notable weakness of the sales comparison approach to value is that A. There may be no recent sale price data in the market. B. The approach is not based on the principle of substitution. C. The approach is only accurate with unique, special purpose properties. D. Sale prices cannot be compared, since all real estate is different. 6.47 In the market data approach, an appraiser A. chooses nearby comparables, adjusts the subject for differences, and estimates the value. B. gathers relevant price data, applies the data to the subject, and estimates the value. C. selects comparable properties, adjusts the comparables, and estimates the value. D. identifies the price previously paid, applies an appreciation rate, and estimates the value. 6.48 In the sales comparison approach, an adjustment is warranted if A. the buyer obtains conventional financing for the property. B. the seller offers below-market seller financing. C. a comparable is located in another, albeit similar neighborhood. D. one property has a hip roof and the other has a gabled roof. 6.49 To complete the sales comparison approach, the appraiser A. averages the comparable values. B. weights the comparables. C. identifies the subject's value as that of the middle value of the comparables. D. identifies the subject's value as that of the nearest comparable. 6.50 One weakness of the cost approach for appraising market value is that A. builders may not pay market value for materials or labor. B. market value is not always the same as what the property cost. C. comparables used may not have similar quality of construction. D. new properties have inestimable costs and rates of depreciation. 6.51 The cost of constructing a functional equivalent of a subject property is known as A. reproduction cost. B. replacement cost. C. restitution cost. D. reconstruction cost. 6.52 An office building lacks fiber optic cabling to accommodate the latest communications equipment. This is an example of A. physical deterioration. B. economic obsolescence. C. incurable depreciation. D. functional obsolescence. 6.53 A home is located in a neighborhood where homeowners on the block have failed to maintain their properties. This is an example of A. curable external obsolescence. B. incurable economic obsolescence. C. functional obsolescence. D. physical deterioration. 6.54 In appraisal, loss of value in a property from any cause is referred to as A. deterioration. B. obsolescence. C. depreciation. D. deflation. 6.55 In the cost approach, after estimating the value of the land and the cost of the improvements, the appraiser A. estimates depreciation, subtracts depreciation from cost, and adds back the land value. B. subtracts deterioration from cost, estimates land depreciation, and totals the two values. C. estimates depreciation of land and improvements and subtracts the total from original cost. D. estimates obsolescence and subtracts from the cost of land and improvements. Test 7, Finance 7.1 What is a lien theory state? A. a state in which a mortgagee holds legal title